What I want to do today is talk about offshore structuring, doing your deals using offshore companies. Now, I've chosen a slightly grandiose title, Structuring for Life. But please rest assured, I haven't lost sight of the fact that surrounded by geologists, investors, and frankly those with the money to invest, lawyers and indeed offshore lawyers come considerably down the food chain. I don't have ideas above my station. I just want to talk to you about offshore and see how that might factor into the deals that you're doing. So I've decided to keep things fairly simple today with the topics. Why should you consider offshore? If I lose you at that point, then you can shut off and take notes about other things, but hopefully you'll stay with me. And we'll move on to when should you consider offshore? Is it just when you're first setting up your mining operation, or is there a wider view that you can take? Where should you look to? There's a multitude of offshore jurisdictions, a lot of choices. Let me try and refine that for you and talk about the ones that are most prolific in your industry. How do you do it? How do you set up the vehicle? A couple of different ways, from basic incorporation to slightly more complex mechanics, which we'll touch on. Who should you be talking to? There's one obvious answer, and that's Ogier. I'll come back to that later on, but I'll try and be a little more objective on that subject as well. So let's kick off. Why should you consider offshore? Now, I don't think it's going to come as anything of a surprise to anyone that tax is usually the main driver in these situations. You'll talk to your accountants, you'll talk to your onshore advisors. If they're looking to structure something where there's a tax advantage to going offshore, then I tend to get a phone call. And that's fine. But it's fair to say now that that is far from the only reason to go offshore. What I'd like to do is actually move away from tax. It's very easy to be a tax advisor or a tax expert in the jurisdictions that I cover. Frankly, BVI, you're not going to have a tax issue. The answer is always tax won't be a problem unless you're employing people in the jurisdiction. So let's leave tax behind for a moment. I'll leave that to the onshore guys. Now let's talk about why else you should look at offshore. I think for a lot of the advisors that you guys already have in place, for the onshore lawyers and for the accountants, one main advantage is the familiarity of the corporate structures that we have in the offshore world. The jurisdictions that we cover are BVI, Jersey, Guernsey and Cayman. For your industry in particular, BVI and Jersey are the most prolific. And those two jurisdictions operate on an English common law system with very familiar corporate structures and partnership structures. So familiarity is helpful. People don't want to, forgive the sort of mining comment, but break new ground, certainly in terms of structuring. Clearly in mining they do. Flexibility of the legal structures and the legislation is another real key, and this ties into our fourth bullet point, which to me really is one of the main threads that I want you to take away from this presentation. Flexibility of the legal structures and legislations enables you in the companies to achieve your objectives. What I'm about is trying to facilitate the easiest way that you can actually get to where you want to be. The most cost effective, strategically the best way to do it, and obviously, as we touched on previously, the most tax efficient way. So how can you best achieve your objectives? And that's where the offshore world can be very helpful, because there's a high degree of flexibility that simply doesn't exist onshore. Many of our jurisdictions are referred to as light touch. Now, the offshore world was always seen as the place where you took large suitcases of money to go and launder them. That's no longer the case. The regulation has tightened significantly, and certainly the jurisdictions that we deal with are all whitelisted, have international standards of regulation and anti-money laundering compliance. All of that's very important. It's very important to gain credibility, to be frank. If you're not prepared to step up those standards, your jurisdiction is dead in the water before it starts. So each of the jurisdictions that we look at have light touch regulation, but it's sufficient regulation. And I think sadly we've got to accept in any industry, in any sector, that things go wrong from time to time. When they go wrong, when there's a shareholder dispute, and we spend quite a lot of time dealing with those, particularly coming out of the Russian market, perhaps won't be any huge surprise, we've got robust and effective court systems in place in each of our offshore jurisdictions to deal with the dispute. A lot of it, again, based on English common law, so there's a good body of case law to fall back on. And that's important. Less developed jurisdictions that you go into, if you have an issue, how are they going to deal with it? You need to be confident that in the doomsday scenario, when things do go wrong, a project doesn't go quite as was planned, you need to have a reasonable mechanic to deal with that. So a number of reasons to go offshore, tax main driver, but let's really concentrate on how to achieve your company's objectives. Okay, so it's flexible, it's going to help you. When are you going to look at it? Well, offshore generally comes up at the inception of a project. So you sat in the room, sat around the table with your onshore advisors, and they've come up with a bright idea that you might consider putting something through an offshore jurisdiction. That's fine, and that's typically when we get involved, but it's again far from the only time that we're involved. And what I'd like to encourage you to do is look slightly longer term than that, or at a number of different stages. So where do we tend to get involved in the mining sector and the natural resources sector? Certainly at inception, so we can be sitting around the table at the initial stages when you're talking about structuring a project. But also, as a company progresses, if you're looking at acquisition targets or looking to make disposals, perhaps you're spinning out one particular mining project with a view to listing it, there are other opportunities for us to get involved. Your target might be an offshore vehicle. You might need some offshore advice at that stage to understand what it means to be looking at a BVI company. How are we going to be able to deal with that? You might also consider with your onshore advisors that making acquisitions through an offshore vehicle might give you some advantages strategically, financially, or particularly again from a tax perspective. So another layer, perhaps through the life of the company as you look at different projects, not just on day one, but actually as you progress and as the company develops. I rather optimistically put up IPOs. I'd love to say we were still doing lots of them. That would be a lie. We spend an awful lot of time and have done over the last couple of years doing a lot of IPO planning, a lot of reorganisations pre-IPO. The number that have actually got over the line is fairly few and far between, although it's fair to say that your sector is actually, in my view, the most likely to get away at the moment. The idea of an investor looking at a tangible asset is still flavour of the month. Not a lot of IPOs at the moment. My view is there won't be that many for the rest of the year, and maybe next year is going to be difficult, but people are still talking about going to market and raising public money. Obviously we've got many more analysts who are expert on that. You can talk to about that sort of planning. So IPO planning, the reorganisation, is all well and good and sounds very positive. Perhaps the slightly negative side caused by the downturn has meant that we spend an awful lot of time, in common with the onshore lawyers, looking at restructuring. Now, it doesn't always have to be bad news. Some of it is cost saving. Some of it can be just to spin out a business that hasn't perhaps performed or is no longer core to the actual objectives of the company. Some of it is housekeeping. I think one thing that I've realised with a lot of mining groups who have been very acquisitive over the years, and this is based through a number of different territories, they've made acquisitions and they've just left the historic group sitting there, or historic target sitting there with whatever subsidiaries it has. The downturn has caused people to look at their group, perhaps consolidate a little, and actually refine what they have in place. And I think that's a good idea in terms of being ready to progress. When things do pick up slightly, hopefully they're in much better shape. So we've been helping them with that. They've suddenly found they've got a Cayman entity dotted down to the far right of their structure chart. Don't really need it anymore. What are they going to do with it? So we've helped with a lot of restructuring that way. Consolidating objectives. I'm going to come on to an example in a moment. It wouldn't be a presentation of a lawyer without lots of boxes and lots of arrows, so true to form, I've included one of those in a moment. But consolidating objectives, what I mean by that, the offshore world can quite often offer mechanics that simply don't exist onshore. And often when you're looking at a series of acquisitions or a series of transactions for your company, perhaps looking at a variety of different targets, wanting to achieve one outcome but with several different component parts, the offshore world can often allow you to package it, wrap it all in one go, and actually consolidate the time frame and the timetable for achieving your objective. I'll come back to that in a moment. So hopefully it's clear from that one of the main things I'd like you to do when going away from this is think about offshore throughout the life of your company, throughout the span of the transaction. I know some of the transactions that you'll look at cover a number of years. Different points through the transaction. Consider whether offshore is viable. It doesn't work for everyone, it doesn't work in every scenario, I'm not suggesting it does, but it's worth bearing it in mind with your onshore advisors. The case study, true to form, arrows and boxes. Just wanted to run through this as an example of how we can wrap the things. And this focuses on the BVI. And in this we use something called a BVI plan of arrangement. Now, a number of you, the lawyers in the room particularly, will be familiar with schemes of arrangement that exist in a lot of jurisdictions. The plan of arrangement is particular to the BVI, the difference being, sorry to be slightly technical on this, it requires a lower threshold of shareholder consent to get it through. So it's a 50% threshold as opposed to 75% typically for schemes of arrangement. So what was the objective in this? The objective of this transaction was to split out 4 underlying business units from a BVI company. Rather neatly in this scenario, each of our 4 shareholders was only really interested in each of the underlying subsidiary businesses, so A in 1, B in 2, etc. So you could see it was quite divisible on paper. We took tax advice, worked with the onshore advisors, and they came back to us and said the best way for the individual shareholders to hold going forward their individual business units is again through newly formed BVI companies. That's fine, that's very easy to incorporate 4 new BVI companies. We then had a BVI bidding company come along. So the BVI bidding company wanted to acquire business units 1 and 2, not 3 and 4. C and D were going to go and run 3 and 4, and that's fine, they were out of the picture. So we needed to think about the best way to demerge the 4 business units, incorporate the 4 new BVI companies with the business units underneath them, and then allow the BVI bidder to come in and merge with business units 1 and 2, or BVI companies 1 and 2. Now the BVI plan of arrangement is a court-approved process, and given the tax jurisdiction, tax domicile of each of the ultimate beneficial owners, the shareholders here, using a court-approved process meant there was no tax trigger event. Now, I'm not suggesting that would work in every jurisdiction. Clearly it wouldn't. There may be regulatory advantages, other strategic advantages. In this case, it was a tax advantage. This was a way of creating a tax-efficient structure. So what we did, as you can see, we demerged the underlying business units, incorporated the 4 BVI companies so they could sit there. C and D went on their merry way and managed their business units quite happily, and the BVI bidder used something called a statutory merger. It doesn't exist onshore in many jurisdictions, but it's very familiar in the offshore world. The idea being that BVI company 1 and 2 are subsumed by the BVI bidder. The assets and liabilities of those companies, by operation of law, become the assets and liabilities of the BVI bidder. It's a very neat mechanic. We were able to wrap all of that up into one court-approved process. So the timetable for that particular transaction, it took us 6 weeks start to finish. We were slightly lucky with court appointments, but 6 weeks to actually achieve something like that is a very condensed time scale. So hopefully that just gives an indication of how we can perhaps wrap up and use mechanics offshore that aren't available in the onshore world. Okay, where could you locate? Now, I should say at the outset that, I think I've already mentioned, we cover BVI, Cayman, Jersey, Guernsey, and indeed Luxembourg. Focusing on the offshore jurisdictions, my experience is with BVI and Jersey companies, and again, to my mind, they're the most prolific in your industry. I'll also touch on Cyprus and Mauritius. I'm conscious there are others, Singapore playing a huge role in Africa, particularly at the moment, but I need to focus on what I know about at the moment. Where should you locate? You want to be talking to people who can be objective about it. Now, I've said at the beginning, obviously Ogier is the answers to most of your problems, but in terms of objectivity, you need people who understand a number of the jurisdictions. There's no point in going into a shop that sells one product, because surprise, surprise, that's what they're going to sell you. You need to talk to people who have an understanding of why there are nuances or mechanics existing in different jurisdictions that might help you achieve your objectives. And again, that's what this is about. Making it as simple and as pain-free as possible for you to get to your end goal. So you're trying to avoid the jurisdictional arbitrage. Talk to people who have experience at various places. That's the legal side, but the reality is, quite often, where you choose to go is actually dealt with by the softer issues. Where have you got existing relationships? Where are your assets? What did the 3 companies before you do? This is not the time to reinvent the wheel. So if you've seen something work perfectly well, then following it's probably going to stand you in reasonably good stead and may save you some costs. So there's some of the softer issues. And the other reality in the offshore world is there's been a huge convergence. So the vehicles and the laws are remarkably similar across the jurisdictions. So I talk about mechanics, but you really need to understand each of the jurisdictions to know where those mechanics are. Because at first blush, the jurisdictions are remarkably similar, and most would be equally capable of facilitating transactions. You need to have a really in-depth understanding and talk to people who understand the variety of jurisdictions. I've mentioned there the role of BVI in Jersey and the role of Cyprus and Mauritius, and I think they play very different roles in the main. And this isn't sort of one size fits all, this again is my experience. I tend to see that BVI in Jersey are usually interposed, or rather superimposed, on top as the top co, whether the company is going through a reorganisation or is looking to list. They are jurisdictions that investors are very comfortable now, regulators are very comfortable with, and other advisors are comfortable with seeing money flow into. They also know it's easy to get money out of those companies in terms of dividends and distributions to investors, clearly very important for a number of you in the room. Cyprus and Mauritius differ significantly in that they have a very large network of double taxation agreements. So if you're dealing with the CIS, you're going to see a Cypriot vehicle in there. You're going to see Russian asset at the bottom, mining asset, Cyprus on top to take advantage of the double taxation agreement, and then you may see something, perhaps a BVI entity or a Jersey entity sitting on top. Mauritius plays a very similar role, as I'm sure you'll be aware, for the Indian market and most prevalently for the mining sector in the African market. But we still tend to see another vehicle placed on top. I think some of that is just down to perception. Things may change, but that's the current view that we're seeing. Of course, one of the things you can do in the offshore world is migrate. So you can be a Jersey company one day and then wake up the next day and you find you're in the BVI, which sounds very simplistic, but again, it allows you to move and work with your advisors who understand the jurisdictions to take advantage of what may be available in each of the other jurisdictions. The reality is in the convergence that the laws look the same. So the offshore world is a lot more fleet of foot than the onshore world in terms of being able to change legislation. We can put calls directly into the regulators and into the legislative bodies in the BVI and actually can get a law change through in a matter of weeks. Can't imagine that happening in the UK. But it does mean that a lot of the jurisdictions cherry pick from each other, so they'll take the best from each one. But as one develops, it's worth keeping ahead of the game, understanding those developments and considering whether a migration would be possible. So what's the main message from this slide is that you need to have an ongoing awareness of what is possible, and it's your offshore advisors with your onshore advisors that should be able to help you do that. Here's a couple of examples that we've used which hopefully show the way some of the structures are set up. These are all in the mining sector, and I've particularly worked on the two examples that are harboured in the third diagram there with the BVI companies. And again, this really shows what I was explaining earlier. Mauritius and Cyprus are there purely for the double taxation advantages, and there's significant advantages. Working with the DRC, we heard a little bit about that earlier, but also Central Asia with Kazakhstan. So we would typically see, and in both those cases, we had the investors saying directly to the company, we want something on top, we're happy with BVI to cleanse the structure. That's how they viewed it. That was their opinion. And that to many of you with the BVI, which is the most junior of our jurisdictions, may seem slightly odd because BVI was always the place to take the large suitcases. Simply not the case now. It's taken a long time to change that perception. The mining sector is actually ahead of most sectors in accepting the BVI and utilising the BVI. Still some jurisdictions we find it quite difficult to persuade people that money laundering isn't rife. I'm sure it's much more rife in Delaware, for example. So that gives you an example, a couple of examples of where we've seen our vehicles used. So how do you incorporate, or how do you get the offshore into your structure? Not going to spend too long on this. It's fairly easy. It's a quick phone call to us to help you set things up. Once we've got the anti-money laundering information, the client due diligence in place, it's quick and easy and it's inexpensive. It's inexpensive to set up the vehicles, but also to run them. The sorts of amounts that we're talking about won't even factor in the projects that you're looking at. No need for local resident directors. That can be quite helpful. What you'll typically have, though, is a local administrator. And while that may seem to be an added expense, which indeed it is, although not great, very useful in linking with the registries of the various jurisdictions. They know how things work on the ground. They usually have a very good line into the registrars of the companies, and that can be very helpful in facilitating a transaction. And again, achieving your goals within the time frame. Perfectly possible to have additional secretaries outside the jurisdiction. So for example, when we deal with the Asian market, we'll quite often see a secretary sitting over in Hong Kong while the registered agent of the BVI company is still in the BVI. You may want another intermediary, you may have a good relationship with them, they may manage your books. That's not a problem at all, can certainly be used. And we do have shelf companies, but frankly, when it's quick and easy to set up a brand new vehicle, which you know has no history, surely that's the better way to go and the cleaner way to go, so we tend not to use shelf companies very often. The other sort of area in how You may have heard of redomiciliations or even corporate inversions, as they tend to be called now. They're basically another form of migration, which I've touched on. I thought it was worth just referencing this, and I'll show you a quick example in a moment. All offshore jurisdictions and some of the onshore jurisdictions have this ability to migrate. The UK doesn't, Australia doesn't. So there's some exceptions. So where you're faced with a jurisdiction that doesn't have that facility, what can you do? All is not lost. It's perfectly possible to use a scheme of arrangement, as it's called in the UK, or indeed an Australian scheme of arrangement, as we've seen, to again superimpose a vehicle on top, an offshore vehicle on top. In the case that I'm going to come to a Jersey vehicle, and then move your structure to sit under that Jersey vehicle, or use that flexibility of Jersey as a jurisdiction or another offshore jurisdiction to then manage your ongoing acquisitions and disposals as things progress. Management and control of the company is not going to be an issue in the offshore world. Clearly tax implications in lots of other jurisdictions as to where you manage and control your companies, but it's not an issue for us. We're completely agnostic as to where management and control sits. It doesn't have to be in the BVI or Jersey, but equally it can be if that's helpful for tax reasons. So the case I just wanted to touch on was Sentiment, which I'm sure a number of you will be very familiar with. Historically had been an Australian company, at the top go, Australian listed company, assets actually sitting in Ethiopia and Egypt. So actually really no nexus other than history with Australia. So we spoke to the company, it's actually my Jersey colleagues, I can't claim responsibility for this one, but they talked to Sentiment just simply about the flexibility, some of the things I've touched on that Jersey could afford. And they decided that given that there were no assets, no nexus with Australia, what they really wanted is something flexible for their ongoing life. So again, this isn't the point of inception, this is quite a developed company, as you know, a listed entity at the time. Still looking at their model and seeing how they can change it and how they can make things better. So what we did here is, through a scheme of arrangement, Australian scheme, put a Jersey vehicle in at the top. You can see the Australian subsidiaries as they were, Australian subsidiary, and then the asset holding companies off to one side. But the new assets would then all be held under the Jersey company. Jersey company, flexible, being used for their ongoing acquisitions. And then that Jersey company was listed in the UK and in Canada. Obviously, quite an important thing, the ability to list the offshore vehicles, recognised on most of the exchanges throughout the world now. So hopefully that just shows you or highlights what I was explaining on the previous slide. Who should you talk to? And I've touched on parts of this, but I think it's really key. You need an objective view. Again, someone selling one product can't be objective. You need to talk to people who understand the market, understand a number of the offshore jurisdictions. You want someone with a track record, experience in the sector. And I couldn't pass on from this slide without telling you that Ogier, in terms of listing work, particularly in terms of BVI and in your sector, are the market leader. We've done more BVI listings in the mining sector than any other offshore provider. Obviously not doing an awful lot of listing work at the moment, but we're still doing a lot for those public companies, which is very important to us. You want people with substance in the jurisdiction. You need people who have been on the ground, understand how it works, and have good lines into the governments there and into the legislation there. That's very important because quite often the actual law isn't rocket science in the offshore world. Getting a deal done can be really difficult, and you need to understand who can facilitate that, and again, take some of the pain out of that experience for you. It's also useful to have people in the right time zones. I sit in London, I sit down the road from here. I practice BVI law primarily and Cayman law, not quite so relevant for mining. But it's quite often useful for your advisors and indeed for you, if you happen to be based in this market, the European market, to be able to pick up the phone to someone or sit with someone real time and talk through the issues rather than waiting for the Caribbean to wake up. We have a similar offering, in fact a larger offering out in Hong Kong to cover the Asian market for that very reason. I guess finally, and I started with this as well, and I unashamedly will finish with it, who should you talk to? There's only one real answer. You should be talking to Ogier. We have a lot of experience now in the mining sector, and natural resources sector generally. Delighted to help you, delighted to take any questions, but for now, thank you very much for your time.
Thank you very much indeed, Simon. Are there any questions from the floor? I have one very quick question. Can you give us an idea about the size spectrum of the companies that you're dealing with, from the very largest to the smallest?
Yeah, and they do cover the entire spectrum. So If I gave you the example, probably at the top end, if I focus on BVI, that's what I'm most familiar with, and that's probably most common for people sitting in this room. At the top end, I work for a company called Gem Diamonds Limited. I'm sure a number of you have heard of it. It's a FTSE 350 company. And that was particularly significant for the BVI because getting an offshore company into the FTSE indices is a real challenge. It's not just an arithmetic calculation in terms of market cap. That company is scrutinised. Shareholder protections, investor protections are scrutinised, and the laws looked at very heavily. So that was quite acute to get that. So that's at the top end. At the bottom end, and no less important, we work with owner-managed businesses who are looking at their first round of seed capital investment. So really right down at the very low end or the early stages. And obviously, ideally for us, we're looking to build long-term relationships with them, and hopefully they have aspirations to maybe float or spin off different businesses at some stage in the future. But it is a sector where we really try and go through almost from cradle to grave. It certainly works that way.
And do you actually ever get to go to the British Virgin Islands with your flip-flops and your Bermuda shorts?
I do. I try and stay clear of wearing Bermuda shorts for work. There's one chap in the BVI who still insists on wearing them. He was in Bermuda earlier for some part of his career. I actually lived over in the BVI for about 3 years, which wasn't unpleasant. And I now have to go back at least once a year, which is obviously a bit of a trial, as you can probably imagine.
Excellent. Any other questions from the floor? Yes, please. Give us your name and company, please.
Yeah, Chris Redmond, Wolfhead Mining. Given the long arm of the IRS and America's extraterritorial protections, do you find that companies seeking to go offshore from the United States face any particular problem?
The short answer is nothing particular to our jurisdictions, and let me explain what I mean about that. You'll be aware from the OECD list, which came out, it's probably 5 or 6 years ago now, you had a black list, a grey list and a white list. The reality is the grey list existed for about 20 minutes and people miraculously signed up enough tax information exchange agreements to get them onto the white list. Our jurisdictions all have tax information exchange agreements with the US among a number of countries. And what's particularly significant now is they've been tested and the US are happy that the regulation is in place in the independent jurisdictions to actually facilitate things should they need to actually look for tax information on particular people. The real challenge now, as I'm sure you're going to be aware, is around FATCA. So FATCA obviously allows almost a fishing expedition from the US authorities to go into the jurisdictions, and the UK among them. It doesn't. They don't seem to mind. They don't pick out the offshore jurisdictions out on their own. It's anywhere in the world, and they can actually get information on US individuals. We can't escape that. We're looking at the moment very seriously at how it affects our business. Some businesses are closing doors to US investors. I don't think in the mining sector that's going to happen. I don't think that's realistic. But we have to be transparent. We can't survive as a jurisdiction if there's any question over our transparency. The BVI, for example, would be dead in the water. So, short answer to your question, nothing special. We're in the same boat as everyone else.
Last question, yes, please.
Neil McLaren, consultant. You showed how it's easy to set up an offshore structure. Is it equally easy to dismantle it if something goes wrong?
Yeah. Again, yes is the short answer. Typically, what we're finding is that again, if I focus on the BVI, a lot of the law, the insolvency law, for example, is set up around the UK statute. It's remarkably similar. Again, it's familiar legislation and robust legislation. If you're left with a shell, offshore company is a shell, if assets haven't worked out, projects have been dissipated, and to actually wind up a structure is remarkably easy and can be done in a matter of days. Obviously, larger companies that go into administration, again, there are full-blown administration procedures in each of our jurisdictions, so it would be the same as dealing in the UK. So you're not going to be stuck with an offshore vehicle, with an offshore structure that you can't escape from. And that's obviously key because things do go wrong. So the courts are there, the insolvency legislation is there, in much the same as any of the other jurisdictions.
Okay, that's all we have time for, so thank you very much indeed, Simon.
Pleasure. Thank you.